Welcome to another video. Today I will be sharing with you a new multi-time frame analysis. So we will be taking a pair, analyzing it from a technical perspective, from a fundamental perspective, and by using these two different views on the pair, we will be able to understand how we can be capitalizing on it, and most importantly, I will try to keep the analysis as educational as possible so that you can understand how to apply these concepts in your own trading strategy. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so there are a couple of very interesting pairs to follow for next week, and I want to speak about them in this video. So make sure you stick until the end, because I will be showing not only education but also how we can apply these concepts on these pairs to be looking for potential capitalizing opportunities on them next week. So let's start. USDCAD. I also had spoken about USDCAD already here on YouTube, so this is kind of an update from that analysis. And what did we say on YouTube? If you remember, we said, or on TradingView, I don't really remember, but anyway, I will link it in the description so you can go and check it out. I just have to figure out if it was on YouTube or on TradingView. What did we say? We said from here we definitely want to see the market start a new move to the upside. And what did we want to see the market make the move to the upside? Because two main reasons that we definitely have to speak again about, because they are part of the structure of the market at the moment. Number one, if we look at what kind of structure the market currently has on the weekly time frame, what do we have? We have a market that is rejecting a very strong previous resistance, now turns support. We had resistance here, again resistance here, again resistance here, again resistance here, and all this previous resistance is now turned support at this area, creating this huge rejection candle. So clearly previous resistance turned support here, and the market already rejected it to the upside, exactly as we wanted the market to do. Plus, what we clearly have on the weekly, we have a market that has created this M formation. After an M formation, what do you want to see? You want to see, after an M formation, the market make a move to the upside and complete the pattern at the neckline. So immediately, by looking at the market on the weekly, we identified two things. We identified that we have very important previous resistance here, turn support at this region, and we also identified that we had an M formation, and from here we want to see the market make a move to the upside. Another thing that we have to check. So on the weekly, it's immediately clear, okay? On the weekly, we want to see continuation to the upside. We want to see the market reach our upside target, which will be the neckline of the M formation. So the previous support now turned resistance. But there is also another thing, as I was saying, that I want to show you, which is, if we go and see what we have from a COT perspective. So commitment of traders, what big banks and institutions are currently doing from a CAD point of view. So how are they positioned in the CAD? Now keep in mind that on the spot, all currencies are traded on the spot against the USD. So if you're checking the data for USDCAD, if you want to check the data for USDCAD, you actually have to check the CAD, which is actually CAD USD, because as I just said, all currencies on the spot are traded against the USD. So if you check CAD, you're actually checking CAD USD. So if you want to check USDCAD, you just have to reverse everything, meaning that if here from a COT perspective, you see that hedge funds went from having 14K net positions to minus 33K net positions. So from having way more longs than shorts from a CAD USD perspective, in fact, they had 63K longs and 49K shorts, all the way down to having way more shorts than longs on CAD USD. That is what we have right now. In fact, we have 52K shorts and 19K longs. It means that they have been adding a lot of shorts on CAD USD. But if we want USD CAD, as we said, we have to reverse everything, meaning that they have been adding a lot of longs on USD USDCAD, which makes perfectly sense considering our overall view that we just seen on the weekly time frame for USDCAD. So as you can see, everything has been lining up, and that is the reason for which in the previous analysis, which now I'm remembering right now, it was on YouTube, and we said, okay, we definitely want to see the market start a move to the upside from this very important structure level. You find that analysis linked in the description. You can go and check it out. And we said from here, we definitely want to see the move to the upside. And we want to see even more continuation because as we have just seen, hedge funds have been adding a lot of longs on USDCAD. So everything is aligning on the weekly time frame for continuation to the upside, overall upside target here. Perfect. Let's go down on the daily and see what kind of situation we have on the daily time frame. Now on the daily time frame, there's a very clear thing that you can see. In this move to the downside, there is one candle which is not related to this move to the downside, which is this green candle here. This is a clear demand area which the market has now broken to the upside. Now, since this is a strong demand area, what does it mean? First of all, let's adjust it properly. This is a strong demand area, meaning that if the market will actually manage to melt back inside of the area, or better said, create a retracement from this impulse back inside of the zone, then what we will be doing with students and what I suggest you to be doing as well. I suggest that you monitor, because that is what we will be doing with students. We will be monitoring price action inside of this area from a 4-hour perspective, and we will be waiting for the market to provide to us one of our valid entries. Because always remember, monthly, weekly, and daily is for direction. The 4-hour is the time frame that you're supposed to be using for entry, because it gives you the possibility to be looking for at least a 1 to 3 risk to reward setup. So with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and good probabilities for the continuation to the upside, creation of a higher high, completion of the weekly M formation, and rejection of the strong demand area, which will line up with a nice Fibonacci level. Because always remember, if you want informations on a retracement, you have to take your Fibonacci on the impulse, which in this case gives you a nice confluence of the 50% retracement inside of this demand area. So this is what we have for USDCAD. The other pair that I definitely want to speak about is NZDCAD. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now on NZDCAD, why do I want to speak about this pair? Because it's very interesting from a correlation perspective, because obviously USDCAD and NZDCAD, they are both correlated. So I want to speak about how even on correlated pairs you can have a little bit of a different scenario. Now here on the monthly time frame, what you can see on the monthly time frame, we have this very strong bearish trend line with multiple rejections. It was resistance here, resistance here, resistance here, again resistance, and now this level is obviously again resistance here, and we can expect a reaction to the zone, specifically because the market here on the monthly has created a nice pattern. Okay, from here the market went down, then created a lower low and an equal high. Now if you see a market go down, go up, create a lower low and an equal high, what can you expect from the market? The market to make a move to the downside, create the inverted head and shoulders, and then start the move to the upside, meaning that from here you want to see the market make a wave to the downside. So if we go and see what we have also on the weekly, we can see that currently more or less exactly what we have on the monthly. The only thing that we can take from the weekly, we already know that here there is this high, this resistance. The only thing that we can really take from the weekly is this. This level here is clearly the previous resistance. Here on the weekly, resistance, 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 now turns support here. So if we want to see a wave to the downside, we want to see a wave to the downside to this level. So perfect. On NZDCAD, we want to see this move to the downside. we go down on the daily, and what we can notice? We can notice from a daily perspective that first of all, this level is very accurate also on the daily, in fact acting as resistance, 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 not on support here, definitely a demand area that the market wants to go and test. But at the same time, we also notice a thing. If you remember, on USDCAD, everything was bullish from a structure perspective. Here in NZDCAD, everything is as well bullish on from all time frames. Okay, the structure is bullish on all time frames. In fact, also here in the daily, we have the high, so a nice impulse, retracement. The market already tried to make the continuation to the upside, creating a support level here. Until the market will remain above this support on the daily time frame, you can't be looking for any shorts on NZDCAD. Now, these two pairs are correlated, okay? Not very much, but a little bit they are correlated. Mostly NZDCAD moves because of the NZD. Mostly USDCAD moves for the USD, unless obviously CAD is making some strong moves, but at the moment, mostly they're moving because of the USD or because of the NZD. That is why NZDCAD is moving to the upside, and USDCAD, if you remember, has been moving to the downside. So they haven't been correlating that well. But obviously, they both have the CAD in them, so you have to take that into account. But that is why trading is reactive and not predictive. It's very, very important that you understand this concept. Trading is reactive, not predictive. Nobody said that we want to long USDCAD and short NZDCAD, but we will be waiting for both setups. The first one that will provide all the rules satisfied, the other one will clearly fail. So we will not take the other one, only the one that is satisfying all the rules. And how do we know that? We know the rules for USDCAD, but what we will be doing on NZDCAD. Now, first, let's go and give a quick check at the COT data. The CAD, we already checked it. We only have to check the NZD. So let's go and see what we have from an NZD perspective, and we can see that we are currently sitting at minus 12K net positions, and with the last reports, hedge funds have been adding a lot of longs. Okay, so if they have been adding a lot of longs, what can you expect? You can expect NZD to continue to the upside, and that is exactly what it has been doing. But if for some reason things change in the market, okay, because situations can change, what do we need to wait for? If the market will actually manage to break this structure back to the upside, this daily support here back to the downside, then on the retest of this previous daily support to resistance, then we will be waiting on the 4-hour time frame for the market to shift from a bullish market to a bearish market, because during this retracement it will become bullish. And then with students, we will be waiting for the market to provide to us one of our valid entries. And as soon as the market provides to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and the market to reach this very important previous resistance, now turned support at this area. And obviously complete the wave that we want to see on the monthly time frame. So as you can see, two slightly correlated pairs can have different views, but one will work and the other one probably will fail, meaning that is why you have to be reactive and not predictive and waiting for the market to actually show you the setup. For example, here on NZDCAD, the market can never break this zone. USDCAD setup will work out perfectly, so NZDCAD you will not take it, and USDCAD you will take it. Obviously, I'm speaking us. I mean, when I speak you will not take it, I mean the students, because obviously you don't have my exact rules for entry. You have to be using your own strategy. This is just for education, because you don't know my rules for entry. Okay, that is part of the mentorship program, but you can be developing your own strategy, your own rule-based strategy, using the knowledge that I give in these videos. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply these strategies with entry, stop, and take profit, as well as answering every question that you have each and every day. So it's a very complete program, the best that you can find out there. The link is in the description, and I will see you in the program.